Welcome back. So let's just take stock of cues across Asia once again. Those markets are very, very mixed. Last I checked, it was just around the flat line and not much has changed till now. The Hong Kong market is actually slightly lower. Yeah, there we go, 30, 40 points on the lower side. So very quiet across Asia. Let's bring up the implied open. For us, obviously, the geopolitical angle becomes an additional watch point, and maybe that's why 98 down. Remember, there was this meeting, very high-level meeting, Prime Minister, Defence Minister, Chief of Defence Staff, NSA, everyone was there last evening, so it's a wait and watch. Anyhow, lots of stocks to track as well as we're looking at all the market news flow this morning, and our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning to all of you. Lots of numbers. So, Abhishek, let's start with Bajaj Finance and Finserv.
Begin with Bajaj Finance. The numbers were slightly below our poll. However, the key has been that the guidance for FY26 is lower than FY25. So take a look at the NI and PAT. They are below our poll. They have also announced stock split of 1:2, bonus shares of 4:1 ratio. And now FY26 guidance, they have guided for 14 to 16 million customers addition. This compares to 18.2 million customer addition that they had in FY24. AUM growth rate to be at about 24 to 25%. This is lower than the long-term guidance of 25 to 27%. Net interest margin to remain stable in FY26. They expect the cost of funds to decline by 10 to 15 basis points, YOY. Fees and charges will grow at 13 to 15%. This is lower than the AUM growth guidance. Credit cost to be in the range of 1.85 to 1.95%. Last time they had guided for around 1.85 to credit cost, but they have overshot it. And for FY24, the credit cost has come in nearly at 2% X of one-off pools that they have created. So ROA guidance has been lowered down to 4.4 to 4.6%. Earlier guidance was about 4.6 to 4.8%. And ROE guidance has also been trimmed down to 19 to 20% range versus the 21 to 23% that they had earlier. In terms of Bajaj Finserv, the basic was our general insurance business that disappointed. The total premium declined by nearly 10% YOY and about 27% sequentially. The gross written premium in that was down nearly 13% YOY and around 35% sequentially. The claim ratio is the heartening point to see. That's improved to 62.9 versus 77.7% in the previous quarter. PAT came down by 4.5% YOY and about more than 9% sequentially. With respect to the life insurance business, that saw a good momentum on a sequential basis. So the gross written premium and the renewal premium were up 45% and 51% quarter-on-quarter respectively. However, the PAT declined by 61.3% YOY and about 81.5% on a sequential basis. Back to you.
All right, Abhishek, thank you very much for that. So that's a comprehensive look at the numbers from the Bajaj companies. Let's talk about BPCL, which reported numbers as well. Suraj here with details. Good morning.
Morning, Prashant. So surprisingly, it's reported a very strong set of earnings led by refining segment. It's likely that both its major refineries, that's Kochi and Mumbai refineries, have seen normalization after the planned shutdown that these two refineries had seen in Q3 of FY25. Even marketing segment was aided by the inventory gains. Now coming to the headline numbers, while revenue was down 2%, but it's almost in line with the estimate of rupees 1.14 lakh crore. EBITDA was up 2.4% and has come in at rupees 7,765 crore against our poll of 5,260 crore. Margin has improved to 7% against our poll of 4.6% and against 6.7% that company reported in the last quarter. Now coming to GRM. It has seen a sharp improvement in GRM, and as I said, because of normalization in two major refineries, the reported GRM has come at $9.20 per barrel against our expectation of $5.60 per barrel. Also, it has seen an improvement on a sequential basis. Now, inventory gains that company has reported was of rupees 520 crore and Citi was expecting of around rupees 50 crore. Now, all the eyes regarding OMCs would be on LPG compensation amount.
Okay, all right. Thanks a lot for that, sir. Well, let's hop across to Mangalam. He's here. He's tracking Vishal Megamart. Morning, Mangalam.
Good morning. So good numbers coming in for Vishal Megamart. If you look at the revenue growth at 23%, it's largely in line with the company's own historic trend of 24 to 26 odd percent. But the margin expansion is something that really stands out. So, year on year, the revenue has grown 23%. The EBITDA, however, has grown 42%, margin expansion of 200 basis points, and the net profit has nearly doubled, an 88% growth coming in from 61 crores to 115 crores itself. What is it that led the growth? Revenue growth was led by same-store sales growth of around 13.7%, but importantly, margins expanded because of one, revenue from own brands came in at 73%. The number last year was 71%. Sales from apparel are close to 26.5% higher. So that's growing faster, and that's reflected in their gross margins as well, which from 26.5% have increased to 28.4%. So more sales from their own brands, higher sales of apparel have led to a bigger margin expansion than the revenue growth itself. So see the stock in the green today.
Okay, all right, got that. So Vishal Mega Mart, stupendous performance. And I was just remembering actually as a contrast, Shoppers Stop has had another rough quarter. So study in contrast, these two companies catering to obviously different segments. Got that, Manglam. Thank you very much. Let's move on to the big news. IndusInd Bank, Mr. Katpalia has resigned from the post of MD and CEO. And Sudarshan, this is immediate, right? And they haven't even named a successor.
They have not named, they have just formed a committee. So first, there has been uncertainty around this bank because after Deputy CEO resigned just 2 days ago, now CEO has resigned. But talking about the stock, it's up 40% from the recent lows that it had hit on March 12 of rupees 606 per share. Now company has announced that its CEO Sumant Katpalia has resigned effective 29th of April. And just 2 days ago, its Deputy CEO Arun Khurana had resigned. Now RBI has formed committee of executives. It has named two people. First, Soumitra Sen, who is currently head of consumer banking, and the second member is Anil Rao, who is chief administrative officer. Now, these two members will be part of committee of executives, and committee of executives will work under the guidance of oversight committee of the board, and that oversight committee of the board will be chaired by the chairman, and currently Sunil Mehta is the chairman. Now, this committee will oversee the operations of the bank at least for 3 months or till the new MD and CEO takes charge. So just because of uncertainty around this bank, I'm going with red for today.
All right. So thank you very much for that. Well, Five-Star Business Finance is the next one we want to focus on. Abhishek is here with details. Abhishek, morning.
Morning, Prashant. So to begin with, the business momentum has slowed down a bit and the asset quality has deteriorated for them, which doesn't augur well in Q4. So disbursements are up 55.2% on a sequential basis. AUM growth has fallen below the 25% year-on-year mark. It's coming at 23.2% YOY and about 6.25% sequentially. Asset quality has deteriorated. Gross NPA ratio has inched up to 1.8% versus 1.6% in the previous quarter. The NII growth is at 21.5% YOY and about 4.5% sequentially. However, elevated provisions have meant that the PAT has grown by almost 2% on a sequential basis. PAT has lacked the NII growth on account of elevated provisions. Back to you.
Okay, all right, got it. Thanks very much for that, Abhishek. On to Star Health Insurance. Yash is joining in. Yash, how are the numbers?
Well, the numbers don't look good for Star Health Insurance in the fourth quarter. The premium growth, net earned premium, has grown at a decent pace of about 12%. The number that has come in here is about 3798 crore rupees. But operationally, the result seems to be really weak. Underwriting loss, that has increased 200% in the fourth quarter. The loss that has come in is 275 crore rupees versus a loss of 92 crore rupees. Operating profit and loss, the company is moved to loss of 87 crore rupees versus profit of 90 crore rupees. Combined ratio on a year-on-year basis has jumped by 642 basis points, coming in at about 99.19% versus 92.77%. PAT is just about 50 lakhs in the quarter as against 142 crore in the same quarter last year.
Okay, Yash, thanks for that. Well, let's hop across to Rima. She's here to tell us about IndiaMART. The stock was sensing, I think, good numbers, ended virtually at the high point yesterday. Rima?
Indeed, the stock was up more than 4% yesterday. Well, the numbers are not great, but they're not bad also. There are a few positives. So the top line growth is flat quarter on quarter, but year on year, there is a growth of about 12.8%. Margins have expanded year on year, but they're down on a quarter on quarter basis. And a higher other income has boosted the profitability of the company. So the profits have gone up by nearly 50%. But the problem for the company is their paying subscriber. That has been very anemic, and even this quarter, the growth is just 1%. The only silver lining is last quarter, the paying subscribers declined by 3,700. This quarter, they managed an addition, but it's still a far cry from the earlier run rate, which used to be about 4,000, 5,000 addition. This quarter, they're only at about 2,100. Collections on a consolidated basis have also picked up compared to the prior quarters at 11.8%. Back to you.
All right, Reema, thank you very much for that. Praj Industries and Schaeffler India in focus. Next, Vamakshi's got those. Vamakshi, morning.
Good morning, Prashant. Praj Industries reported a miss across the board. It was a weak set of numbers coming in from the company. When we look at the revenue, that saw a downtick of almost 16% on a year-on-year basis. The other expenses as well as the employee expenses, both of them saw an uptick of nearly 17%. And resultantly, the EBITDA margin came under pressure, down nearly 424 basis points. The EBITDA too came in nearly 43% lower. When you look at the net profit, that is coming at nearly 40 crores. This is a downtick of almost 57%. It's a miss across the board. But on the flip side, when you look at the order intake as well as the backlog, the order intake was up nearly 11.7%, while the order backlog was at 4,293 crores, an uptick of nearly 11%. So therefore, it seems like there was an execution-related issue which caused the miss on the numbers. But apart from that, the company also made another announcement. They said that they've joined forces with Thyssen Group Uday. Then together they will be working on end-to-end offering for PLA, that is polylactic acid production. So therefore, on the back of weak set of numbers, going with the red for Praj Industries. But apart from that, keep an eye out on Schaeffler India as well, going with the green for this counter, and that is mainly on account of an improvement in the margins. Let's look at the numbers then. Revenue saw an uptick of almost 16%. The margins have improved from 17.6% to 18.5%, and the net profit has come in nearly 14.5% higher.
Okay, all right. So Praj, not that great. Schaeffler seems to have done better. Vamakshi, thanks very much. Let's quickly recap our list of stocks to watch. The ones that have positive news flow or positive earnings are BPCL, Vishal, Mart, Star Health. Star Health actually on the lower side, should be in red. Schaeffler India and IndiaMART Intermesh. Stocks with negative news flow are IndusInd Bank, Bajaj Finance, Bajaj Finserv, 5-Star Business Finance and Praj Industries. Okay, that's the stock list for the morning. Now let's move on to commodities. We've got Manisha Gupta joining in with a roundup of all the overnight action. Manisha, good morning. Trade deal with India is happening, but what else is moving the commodity markets?
Well, I'll have to start with the crude oil prices because we've seen 2.5% of decline in the overnight markets. And with this, crude is down 15% in the month of April, and it's trading at a 2-week lows right now. The U.S. crude oil prices just about holding $60 a barrel right now. That is because of the shift in global policies, and that's weighing on demand outlook. The U.S. consumer confidence numbers came quite sharply yesterday. And then the markets are dealing with higher supplies as well. Remember, the OPEC will add 411,000 barrels from the month of May. And the U.S. crude inventories have risen by 3.5 million barrels. U.S. also is producing record numbers of oil right now. So everywhere that you look, you have higher supplies and demand uncertainty, and that has been weighing on crude oil prices. A quick word on the gold prices, and it's Akshaya Tritiya today, and the prices have seen a 1% decline in the overnight market. Well, that really leads to better buying expectations in the Indian markets right now, but the global crude price is clearly reacting to the optimism on de-escalation of trade war between U.S. and China. Also, the U.S. global investors do believe that the gold price estimates will be on the higher side by the time this year ends. We still have those banks reiterating 3,500 to 3,800 by the end of this year.
All right, Manisha, thank you very much for that. So that's gold and Akshaya Tritiya today. So we've been, of course, telling you about the stunning rise in gold prices for a while now. And of course, we'll continue to put the spotlight there. We have N. Jayakumar, Group CEO and Managing Director at Prime Securities, joining in for some market conversation. Stay tuned, coming up.